Hello to all Trading Link partners. It's time for our weekly trading sharing session again. Today is November 15th, 2024, the middle of the month. This week marks the second week of November and the first trading week after the US election. This week has been very exciting because at Trading Link, over the past several weeks, our market forecasts have achieved significant results and successes last week. You can review the predictions we made last week for this week's market trends. This week, let's talk about the market predictions for several major trading instruments. Let's first look at gold. Last week, our predictions for this week's market movements were 100% accurate, and the price levels provided were exceptionally precise. Last week, we mentioned that in the upcoming week, you could rely on the 27101 line to go heavier on weekly trades. After last week's interest rate meeting concluded, the short positions initiated at the 27,201 line were held until the lower Bollinger Band, resulting in a gain of over $160. Depending on the position size, ranging from 1% to 5%, the highest account has already seen over 70% returns. This was our prediction for gold last week, and the trends matched exactly. Last week, regarding crude oil, we recommended avoiding crude oil as a trading instrument 2 weeks ago. If we look at the monthly chart of crude oil, the trend was very bleak. Our prediction at the time was that the intersection of the 5-month moving average and the 60-month moving average, combined with Trump's election victory, would suppress long-term inflation, possibly leading to a prolonged bearish phase for crude oil. This week, you can see that the trend for crude oil was also poor. Last week, we continued to take short positions above $72.50 based on the Fed's announcements. Although the volatility was small, the returns were still satisfactory. This was our prediction for crude oil last week, and you can see that the timing, price levels, and rhythm were very clear. Looking at Forex, last week, we mentioned that after the results were announced, the dollar would show significant strength. From Monday, there were 4 consecutive bullish candles, and after stabilizing at the 5-day moving average today, it formed a small consolidating bearish candle at the high. The dollar index showed strong performance for the week, and we also shorted a series of non-US currencies. Although the position sizes were not large, the overall returns up to now have been very satisfactory. Next, let's talk about the highlight Bitcoin. Those who regularly watch our videos may recall that we've consistently emphasized Bitcoin's trading range. 2 weeks ago, we predicted the market movements before the US election, as well as our operational strategies. We mentioned that if there were a false breakout before the election results, we must guard against a rapid pullback or rebound. In the case of a false breakout, we advised hedging spot positions with futures contracts to mitigate risks and set cost-based stop losses. If these cost-based stop losses were in place after the election results, once the range was broken and the short position offset, the long position could then be held for the long term. I'm not sure if everyone followed the operational step, but some may have chased the highs, such as entering above 76,000. Our forecast for Bitcoin was that after breaking previous highs, the election results would allow for long-term holding. We believe the outlook for Bitcoin is very promising. For our leveraged trading and asset management teams, we didn't use very heavy positions, as we consider the capital utilization rate to be low. However, many of our crypto fans, investors, and institutional partners heavily invested in spot positions. Once Bitcoin broke through 73,000, we recommended adding to long-term holdings. However, many spot investors trading on cryptocurrency exchanges find it difficult to use cost-based stop losses and take profits effectively. Today's review of last week's market movements and our forecast accuracy and precision should already give you an understanding of the outcomes. Next, let's look at a few accounts that demonstrated exceptional trading performance. First, we have a client using MT5 to trade Bitcoin. This client transferred funds from the cryptocurrency space into the MT5 system on November 4th. The primary reason for this transfer was to take advantage of Mount 5's quick cost-based setup options. A few weeks ago, following my recommendations, the client opened an account and placed a breakout long position based on our advice. After the trade was entered, the market broke upwards, and the cost-based stop loss was implemented. At that time, the client used an AI to manage the trades, and the platform's trade limits meant that only 10 Bitcoins could be held. The position was opened on October 6th and has not yet been closed. The take profit was set at $125,000 and the stop loss at $74,000. The entry price was below $69,000. If the price fell below $74,000, the stop loss would secure a profit, as it was set at a profitable level. Each Bitcoin had a stop loss profit of approximately $5,000. If the price rose to $125,000, $100,000. The take profit would trigger automatically. The client found MT5 convenient to use, particularly for placing breakout trades and securing cost-based stop losses after profit. The platform also offered liquidity for instantaneous order execution. However, as this is a CFD, only 10 bitcoins could be traded, with some platforms allowing for 20 or 30. Additionally, leverage was relatively low at just 20 times. With a $500,000 account, the floating profit has already reached $190,000, and at the recent high of $93,000, it may have been even higher. The take profit level at $125,000 is very clear. This case represents a typical example of using the MT5 system for cryptocurrency trading. The second account has a remarkable trading history. The positions were closed at a high point of $91,000, with total profits exceeding $240,000. The initial deposit was $700,000. Although the profit margin of $200,000 for this trade isn't huge, it reflects effective use of a convenient trading system. However, there was a high-level re-entry at $91,600 after the closing trade. Currently, the account has a floating loss of over $30,000. The profit from this trade was approximately $100,000. This was due to suboptimal pricing decisions, and the client plans to adjust the position and pricing around $100,000. This account reflects the performance of one of our new traders managing external funds. The third account is quite extraordinary. This involved gold trading during the first week of the US election, before NFP Thursday. At $2,800, 3 short positions of 2 lots each were opened. The first batch of shorts was entered in 3 stages. After Trump's victory became more apparent during the election results, a second batch of 3 more lots was added with a somewhat speculative approach. When the market plummeted that evening, a third batch of 1 lot was synchronized with other traders on Friday evening. On Saturday morning during the European session, another position was added, followed by a bottom breakout addition in the evening. The execution of the first, second, and third batches was exceptionally precise. For the largest account, the profit rose from $2,785 to $2,568, a gain of over 20 times, equating to over $43,000. The first batch of trades yielded a total profit of over $120,000. The second batch added about $10,000, and the third batch contributed another $50,000 to $60,000. Overall, the total profit was $300,000, and the initial account deposit was just $60,000, achieving a 5 times return. This account belongs to one of our new traders managing external funds. While we don't control positions or risk levels, this particular trade delivered exceptionally high return. However, most of our key accounts focus on more conservative position sizing. Looking at the current trend, this movement may not be over yet. Now let's move on to the next segment, forecasts and predictions for next week's market. This part might be of particular interest to many retail investors and followers. It's important to note that market predictions are not our department's primary focus. We are primarily a risk control team for traders. However, our market forecasts are continually aligned with insights from our technical team to ensure synchronization. We integrate market trends, technical analysis, and profitability and loss data to manage system-wide risk control effectively. First, let's discuss crude oil. Crude oil is likely to remain in a weak consolidation range with a very narrow trading range. On the daily chart, the 5-day and 6-day moving averages are nearly overlapping, and the Bollinger Bands don't look particularly promising. There aren't many trading opportunities. Retail traders looking to practice could try short-term range trades between $67 and $72, a range of about $4-5. However, crude oil is not one of our favored instruments. Next, gold remains a focal point for next week. Gold may require an upward adjustment. If this adjustment reaches the 10-day moving average crossing the 60-day moving average on the weekly chart, the next wave of decline could be more sustained. We're focusing on quarterly chart adjustments, with a mid to long-term target of $2,400 for gold. The prevailing approach is to maintain a bearish outlook, but it's essential to find a suitable entry point for short positions. Currently, on the daily chart, the 5-day moving average hasn't been reached for approximately 20 hours, which is quite rare in this pattern. A divergence and oversold condition might justify an adjustment to the 5-day moving average. So, avoid blindly chasing short positions and remain patient. Only with patience can you achieve the precision demonstrated by other accounts. Do not become impatient or reckless. This is our overall outlook for gold next week. Bitcoin will likely remain a key focus for many. Our team's perspective on Bitcoin has shifted from its correlation with gold, as this correlation has weakened over the past few months. Bitcoin has begun to develop its independent trajectory. We now believe Bitcoin might take over gold's role. In the past 8 months, gold has consistently risen on the monthly chart but seems unable to rise further. Factors such as the Federal Reserve's interest rate cuts are unfavorable to gold. Bitcoin might now assume the role of continuing a strong upward trend on the monthly chart. While we can't predict if Bitcoin will rise to $100,000 or $200,000, it's essential to be cautious. If Bitcoin shows weekly chart adjustments but continues a strong pattern week after week, do not attempt to short it. 8 months ago, few expected gold to sustain such a long uptrend. Bitcoin could display similar unexpected behavior. Even if Bitcoin rises to $90,000 or $100,000 and continues for several months, this cannot be ruled out. For spot holdings, you might not need to check your account daily. Simply hold and see how far it goes by next year. For futures, despite the clear trend, the extreme volatility could lead to significant losses. Minute-to-minute fluctuations of $2,000, $3,000 make it highly risky for futures traders. Lastly, let's discuss non-USD currencies. The EUR-USD pair has reached prior highs, and on the weekly chart, the dollar index has climbed to 107, which is both a yearly and relatively high point. Thus, Forex may see some corrections next week. Avoid blindly chasing the upward trend, as adjustments are likely. Overall, the trading approach remains straightforward, with clear market directions. This concludes our market summary for this week. Our team performed exceptionally well, navigating highly volatile markets with great precision. Given the year-end period, we aim to deliver a satisfying report card for our partners and funds. Thank you for joining us this week, and we wish you a pleasant weekend. Lastly, a bit of advertising. We hope more partners and funds will entrust their accounts to Trading Link's team and our excellent traders. Although the minimum is $1 million, we encourage everyone to actively exchange ideas about technology, market trends, risk control, and trading strategies with us. Thank you, and that's all for this week's analysis.